Welcome back, financial investors. My name is Brent, and today I want to go over my portfolio from the 1st of August 2019, going forward, how it is now generating over $1,000 of dividends. Now, this portfolio has been beefing up month after month, year after year here these last few years, and I want to go over all my holding, the shares, and how much they are paying me out. And I'm also going to be sharing with you a special website I've been using to track what stocks are upcoming with payouts. That way you can sort of plan going forward when you're expected to get payouts and when you can be reinvesting those dividends. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, and real estate. If you enjoyed this video, find it helpful, hit the thumbs up. And if you have any comments or questions, drop them in the comment section below. And let's go ahead and get into the video. I'm going to go ahead and flip my screen around here. And we're going to go ahead and start off on my website. I've been looking to revamp my website a little bit, giving more information, going across my portfolio, my dividend income, my portfolio updates. Every once in a while, I'll do a portfolio update, which is just posts or articles related to updates in my portfolio. And then I share other investment portfolios that I have created, or my own portfolio is also found here as well. Now, my dividend income is always posted every month. I update my dividend income going forward, and we can see here that the M1 Finance portfolio, this graph here up at the top, so far in 2019, it has generated $278.43. We have already surpassed what 2018 paid us out. 2018, we started this M1 Finance portfolio with $5,500 in January 2018, and we started dollar cost averaging throughout 2018. Now, going into 2019, we could see it was almost double the amount of dividends getting paid out every single month here. $38 in January, $33 in February, $38 in March, and then it kind of slowly increased from 38 to now 40, from 33 to now 37, from 38 to now 42. And here we just finished up July going into August. So here we're going to start to see a continued growth month after month, and slowly by the end of the year, this portfolio should generate roughly 500 and some change of just straight dividends. Now, I have other portfolios as well over on Merrill Edge that are also generating income. I was holding Apple primarily over in this portfolio in 2019. I did sell that off quite a bit ago, moved into a few other positions. So this one, while it is generating roughly $75.30 in dividends right now, I have recently made some adjustments, which has definitely increased the dividend income going forward. And then my Roth 401k, I started this back in February, March of 2018. I only put in 5% of my salary towards my Roth 401k in order to get my match, and this portfolio is steadily increasing here. You can see last year 538, 1338, 2428, 2570, and now in 2019 this portfolio is in the $30 range, going 3472, 3228, and I should be getting another payout here in September timeframe. But that is the dividend income that we have received. Now, if you come over to my website, click on my stock portfolio. I have a link in the description below. If you guys want to check out my website and kind of scroll down, you'll see that I updated this portfolio here on the 1st of August 2019. The current annual income from August 1st going forward was $1,007.97. This was an increase of $191.09 from just a month prior. Now, what exactly changed? I don't mention in my spreadsheet what positions are new, what positions are averaged into. Maybe that could be something I could possibly add into here. But here, we'll start off with my Merrill Edge portfolio. I don't have too much capital within the Roth IRA over here. I liquidated it when I started my real estate business. Probably not a great idea, but I did do it. So I only hold about $30 of equity in here, and I own we'll just say, we'll round these to whole shares to make it better, easier. So I own Gladstone, I own one share, Italy Capital Management, I own 1 share, and Tatron Components, I own 2 shares. So not a lot of equity within this portfolio. It makes me roughly $2 in annual income, not a lot there. Now, here's where I've recently had some big changes. I had owned 4 shares of Google. My unit cost was about $1,080.91. It did not produce me any dividend income. My big dividend payout here was AbbVie. I still own 56 shares here. My unit cost was $69.72, and my starting yield for this one was 6.14, generating me now $239.68. I've recently sold off my Google positions. I was up some 10 to 15% here with this market volatility. It was more of a bottoming out value opportunity where I could buy it, wait about 10, 15%, sell out of those shares, and move into something that I feel a little bit better holding for the long term, such as maybe a SPHD or an SPLV ETF, or maybe I should average just a little bit more into AbbVie, getting that 6.5% starting yield and kind of dollar cost averaging my unit cost on this one. So you may see this income here, this annual income, slightly increase here going forward as I've liquidated the Google position in order to free up about $4,000, $5,000 of equity here within the portfolio. Now, as far as the Roth IRA, this is the one I talk about the most here on the channel. This is just filled with a lot of individual positions from 3M. I own around 3 shares. AbbVie over in this portfolio as well, about 8.5, and so on. Now, each one of these positions is steadily building week after week, month after month, and every week I add brand new equity, $115.38 into the portfolio. By doing this, it allows me to dollar cost average into positions that are currently down. So here, if I flip over to my all rating, we can see that this portfolio has taken a beating here recently, but that is fine. This is opportunity for me. Here in the past few weeks or months that you've been probably following me here, if you are brand new to the channel, hit that subscribe. Otherwise, if you have been following me on the channel, you aren't subscribed, hit that subscribe. But I've basically only had 4 positions that were negative. Now with this market volatility, we see lots of positions in the negative, from Johnson & Johnson, Stanley Black & Decker, Eaton Vance, Tanger Factory Outlet, Walgreens, Las Vegas Cardinal Health. Many of these companies that were positive in my portfolio just a few weeks ago, here with these trade war back on, are now in the red. And here in the short term, this is just a blip on the graph. You know, when you're looking back at today, 10 years from now, when you're invested in solid, good companies for the long term, and your dollar cost averaging on them, you're lowering your unit cost, you're getting a better yield on cost, you're increasing your total dividend income from that specific stock. Here over the long term, that share price is going to adjust. It's going to continue to rise as that company generates more revenue, as its earnings increase, as that company continues to raise and pay out a dividend. You're going to see that company continue to just trend higher year after year at an average basis, depending on what your average growth is per company that you're invested in. You'll get an average in your portfolio. If you're investing for appreciation, that's great, as long as you're keeping your appreciation. But these companies are also going to be paying you out dividends, and those dividends will reinvest back into your portfolio, increasing your share count, which increased your dividend income, and it compounds just week after week and month after month. So here, having some red in the portfolio definitely gives me more options to dollar cost average down, and I feel it's a little bit easier. Now this portfolio over here, just on M1 Finance, that I just started here in 2018, where'd it go? This is generating now from August 1st, 2019. It is making $581.64. So if I bring up my handy dandy calculator here, let's go ahead and bring that up. And we go ahead and punch in 581.64, divide that by 12 months. On average, this portfolio is generating $50 per month. Now, could I live off $50 per month? No, but this is only a year and a half into this portfolio. If I continue to build this portfolio year after year over the next 30 some years until this portfolio, until I hit the age of 60, 59 and a half, 60, whichever, and I start withdrawing that income, the dividend income will be 100% tax free. I won't have to pay any capital gains taxes on my capital gains, on my dividends, on the interest that this portfolio is generating, because it's all within a Roth IRA. So all those REITs, all those single stock portfolios that have been continuously dollar cost averaging, they've been raising their dividend year after year. I will basically just be withdrawing the dividend, leaving the equity invested in the shares. Those shares will continue to adjust in equity, but that will not matter as they continue to pay out dividends. They'll just basically be writing me a check. Now, the wife's taxable account is invested in ticker symbol VOO. It holds almost 2 shares there. It generates roughly $10.50 of income per year going forward. Now, I don't invest a whole lot into taxable accounts. Me and my wife prefer to use the retirement account. So my wife has her own 457 plans or some Roth 401k plans. I also have a Roth 401k where I have 2 holdings, the Vanguard Growth Index and the Vanguard Institutional Index. Now, the Institutional Index Fund actually has a higher yield, a 1.99% yield, whereas the Growth Index has a 1.12%. So here you can see that the actual dividend income is quite a bit different here, $59.33 versus $103.75. So this portfolio I also started my Roth 401k back in 2018, around February, March. I had the option to start it. I went ahead and started it, put 5% of my salary towards that, and it is now generating me on an annual basis going forward $163.09. So very nice portfolio. Now, if you combine all of these together, $163.09, $10.50, $581.64, the $250.83 from the Merrill Edge IRA, and $1.91 from the Roth IRA, we get a grand total of $1,007.97. Now, I believe going forward, this portfolio is going to continue to get higher and higher here, going week after week and month after month, as I am adding brand new equity into the markets. I would really, really like a pullback. I'm not sure if I will get that. I've been kind of on the fence whether I want to add to my own IRA or Roth IRA here in 2019. I've been doing I've been adding to my wife's Roth IRA here in 2019, and I've been primarily keeping my equity invested in my business, growing my real estate business, making sure that it's functioning, getting everything in line so that it functions smooth and easy without me having to babysit it on a week by week or month by month basis, where I just get my reports sent to me from my property manager. I'll go into my spreadsheet on QuickBooks, enter my information, and that is, it's shared with my CPA, and everything is adjusted there. And that flows very quickly. I may have to spend maybe an hour or 2 per week on my real estate business, but besides that, I don't have to do a whole lot besides researching and looking for my next deal. But that is basically all I wanted to cover in today's video. I'm sorry. The next thing, I know this video is going to be slightly long, but if you jump over to dividend.com and you select your tools and Dividend Assistant, this is a brand new sort of function here that I've been using recently to kind of track what stocks are upcoming on payouts. So for example, here down towards the bottom, I have entered every single one of my holdings. Now, I hold partial shares, so instead I rounded them to the nearest whole number. Now, AVI is my largest share position at 65 shares, followed down all the way down here to the bottom there. Now, I am not able to include some positions inside of my Roth 401k, my thrift savings plan, or other 401k plans. So this is only including some of my single stock positions, and this will generate roughly $864. But the great thing down here is if you scroll down, you'll be able to see the dividend deposit schedule of when your holdings across all your portfolios, if you choose to add them onto here, will pay out. So here, for example, I have Lowe's, which I know on the M1 Finance portfolio, I've been through the ex-dividend date. Based on the shares that I hold, I should get paid out roughly $2.20. And if I want to, I can jump over into my spreadsheet and actually take a look here at Lowe's. And Lowe's should actually pay me out roughly $2.09. So here, for example, I rounded up to 4 shares versus 3.79392 shares, and that is why it shows 220 here. But in reality, M1 Finance will pay me out $2.09 based off the partial shares that I hold. So that is basically all I wanted to cover in today's video. Jumping back to the large screen here now. So that is really nice and easy, quick update on the portfolio. I just want to make a quick video here showing how much dividend income one can get started and kind of build up to just within a year and a half. Start off small. It only takes $115.38 on a weekly basis in order to put aside $6,000. And if that is all you have to invest, $1.15, $115.38 or less, put aside, pay yourself first, get your net income from your W-2 job, pay yourself a set salary. Say you pay yourself $100, $50, $100, X amount, and then pay off all your bills. And then whatever cash you have available, that, I'm not going to tell you what to do with your capital, but always pay yourself. The very first that you should be taking out of your net income should be a payment to yourself. I don't look at how much I'm depositing into my investment accounts. Everything is automatically scheduled to withdraw out of there. It withdraws out of there for my Roth 401k. It comes out of there for the Roth IRA, and it's all automated. You don't have to worry about it. You're paying yourself automatically on a day-by-day, week-by-week, or a month-by-month basis. So it is for sure important to get this, because over the long term, you're going to wish you had started it sooner, and you don't get to make back time with just, it doesn't work that way. So that is it for today's video. If you guys did enjoy this video, hit the thumbs up. If you have any comments or questions for me, upcoming video content you would like to see here on the channel, hit that, drop a comment in the comment section below. And of course, if you have not yet subscribed to the channel, subscribe to the channel. I cover the stock market, dividends, and real estate. And thank you all for tuning in. I will see you next time. Have a great day. Bye.